Welcome to the Transparent FX Academy. My name is Nick and I'm a top podder on TradingView. And as a top podder, today I'm going to show you exactly how you can become a profitable trader by exploiting multi-time frame technical analysis and order flow. Now let's not waste any more time. Let's go straight in the charts to find some good trading opportunities. Okay, so the pair that I want to speak about today is AUD USD, and the reason for which I want to speak specifically about AUD USD is because it is very near to providing to us a good trading opportunity. So obviously I want to create a full breakdown of the pair and show you exactly what kind of opportunity we can be looking for the pair, but also provide a lot of education because as usual, I will keep the analysis as educational as possible. The way in which I will be structuring the analysis is first speaking about the market from a technical perspective. We will then go and see what is going on from an order flow perspective to see what hedge funds and the smart money in the market is doing by checking the commitment of traders, which is the institutional order flow to see what the big players in the market are doing. And obviously, if you're able to read the data, you do have an advantage over your competition in the market. And then by the end of the video, we will know exactly where are the best probabilities for this pair. So without further ado, let's get straight into the analysis. Now, starting from the monthly time frame, what we can see. Now, on the monthly, we can see that the market is currently testing a quite strong area of structure from a monthly perspective. In fact, this zone was acting as very strong support here, against support here, against support here. The market broke below the area. At that point, this previous support is turned resistance and the market respected it as resistance here, again here. Then the market broke back above the area and at that point, previous resistance is turned support. And you expect a test and a rejection to the upside, which is exactly what the market is currently providing. The market is providing a test and a rejection of this very strong horizontal structure area on this pair. So on the monthly, everything is very clear. We are rejecting a strong historical structure level for this market. Going down on the weekly, what do we see? Now on the weekly time frame, situation is very interesting. We can see that in all this impulse to the downside, there is one candle which is not related to the move itself, which is this green candle here, which means that this green candle is a strong supply area for this market. And in fact, this is exactly the zone that the market is rejecting. It has already rejected it twice. So on the weekly, we are testing strong supply and we can expect the market to give us a retracement after we have clearly seen this deceleration at the supply area with two rejections, and we also have the impulse to the upside. So after an impulse in general, we always expect a retracement from the impulse. And the impulse is very clear also on the daily. In fact, if we go down on the daily time frame, we can see that the market has created an impulse to the upside and it has also created a bearish pattern. In fact, on the daily, we can see that we have created this overextended W formation. Now, in general, after an overextended W formation, what you want to see is the market create a move to the downside at least to the 0.382 of the Fibonacci taken on the impulse leg, but overall, you would like to see the market create the completion of the overextended W formation at the last target to the downside, which is the previous resistance, not our support, which is the neckline of the pattern itself. This is the completion area of the pattern. Now, we had spoken about AUD USD quite a few times in the past. We spoke about it after the market had created this overextended M formation. I made a full breakdown when the market was here, explaining all the reasons for which first we wanted to see a retracement and then the continuation to the downside, and that is exactly what the market did. Then I spoke about AUD USD after this M formation, explaining all the reasons for which from here we wanted to see the market create a nice move to the upside, and again, that is exactly what the market did. And then we spoke about AUD USD after this W formation, and as we have already said also now, we want to see the market create the move to the downside. And by the way, I will link in description this previous analysis so you can go and check it out for further reference and more free education. Just a quick reminder, make sure you comment below and you let me know which pair you would like me to cover for a trading opportunity in next video. But at the moment, what is the situation and how we can be looking to capitalize on AUD USD? Now on the daily, even though we want to see the market create a nice move to the downside to possibly complete the W formation all the way down at the last target, which is the neckline of the W, even though we would like to see this move to the downside, we must acknowledge that on the daily, we still have structure at this area. In fact, this zone here is a quite important structure level for this market, which was the previous resistance here, again resistance here, which the market broke to the upside with this impulse. At that point, previous resistance is turned support, and now the market broke back below the area, or better said, it is below the area. The break is still not confirmed. Why is still not confirmed? Because this daily candle that we're currently trading in still has 10 hours and 44 minutes to go before it will actually close. So only if we will see a confirmed close below the area, or only at that point, this area will again be turned resistance. So we have to wait for a confirmed close below this zone with a nice red close. And at that point, this previous support will now again be turned resistance. So definitely looking forward to see if we will actually see the close below the area. And if that will be the case, how we will be approaching this situation with students for a nice trading opportunity. Now, before I show you that, let's first go and see what we have from a COT perspective. So commitment of traders, which is what hedge funds are currently doing in the market. Now, if we check the COT data, what we have to check for the AUD USD is the AUD. Why do we have to check AUD to be able to check AUD USD? Because always remember, all currencies on the spot are traded against the USD. So if you check the data for the AUD, you are actually already checking AUD USD. And on the AUD, what we can see that net positions have been greatly decreased. In fact, we went from having 16.3k net positions all the way down to having minus 8.7k net positions, with an extra 7.1k longs closed with the last report and 250 shorts opened. So a massive amount of longs is getting closed and shorts are getting opened. So definitely, this is in good confluence with what we would like to see from a technical perspective, as we have already explained. Currently, we also have a 44.5% short exposure, so definitely a big increase from the 33.3% short exposure that we had here. And the long exposure has been decreased from 45.6% to 37.8%. So from an institutional perspective, we are seeing shorting. So definitely we can be looking for the move to the downside. Definitely this is good confluence for our overall bearish outlook for AUD USD for the completion of the W formation. So how we will be approaching this with students? Now, first of all, we need to see the confirmed break below this structure. So if we will see a confirmed break below the structure, at that point, previous support will be turned resistance. And as usual, monthly, weekly, and daily, combined with the COT data that we have just checked, are the best time frames for the direction of the market. But the best time frame for confirmations and entries is the 4 hours. So if the daily break will be confirmed, then what we will be doing with students is monitoring price action from a 4-hour perspective inside of this area. And what we will be doing is waiting for the market on the 4 hours to provide to us one of our valid entries. And only if the market will provide to us one of our valid entries from a 4-hour perspective inside of this area, only at that point with students, we will be taking a nice short with a good risk to reward and good probabilities at that point for the move to the downside and for the completion of this overextended W formation, at least at the 0.382 of the Fibonacci taken on this impulse leg. And overall, it would be great to see the market even complete the pattern all the way down at the neckline, but minimum the 0.32 of the Fibonacci taken on this impulse. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education on all my platforms. Also, make sure you go and check out the mentorship program. You'll find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Each and every day you get a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, and take profits, as well as having me answering all your questions personally every single day. So I really suggest that you go and check it out. The link is in the description, and I will see you in the next video.